Well, let's now focus on copper. Shawn Hickman joining us from Market Matters. Shawn, welcome.
Nice to be here.
So copper, we look at the overall thematic, I guess, what's going on in there, and obviously the global need for copper has been on a bit of a tear of late though, hasn't it?
It's just such a fascinating story, and I've talked about it a few times with you over the last year. But what's happening at the moment, it's so interesting. I've never really seen the like of it, and I've been in the markets for too long, as people can tell from my hairstyle. You know, it's just, we've got Trump talking about tariffs. People are thinking tariffs are going to come into play in April, and copper in America is trading around 15% above where it's trading in Asia. So you've got, similarly, the chart illustrates it perfectly. You've basically got the perfect arbitrage. If you can get your hands on some copper in Asia, sell it into America, you're making 15%. I'd imagine the Macquarie, some of the Macquarie desks, they've got traditionally great commodities areas, are looking at this very, very closely.
Yeah, indeed, those commodity traders. So maybe we'll go to the next chart, actually, just in terms of their monthly chart. So what's actually driving the price at the moment overall?
Well, there are two factors. The overall scenario is we've got copper's having a bounce. The recovery in China is picking up very slowly. Copper is, as we all know, a big part of the electrification side of things. So I'm not kind of splitting it in two sides. Copper is being dragged up by a false market. There are concerns around tariffs. The first chart we showed before is driving copper falsely high. And if that was the only thing at play here right now, we would be very, very seriously looking at taking some or all of our copper off the table, because these things have a habit of coming crashing back down to earth when things come back into normality. Because markets are driven by supply and demand, not by Donald Trump in the bigger picture. He's trying to protect the US for copper going forward, which makes perfect sense, but obviously it's a sledgehammer style approach. But if we look at copper, that chart there, copper in Australian dollar terms, it's surging to new all-time highs, because we've got copper, it's strong. Trump is driving copper up in the short term, but we've also got electrification. I think the average electric EV car uses 3 or 4 times more copper than your combustion engine car. There's demand for copper increasing. I mean, we saw BHP try and buy Allied America last year, Anglo America last year. They're trying to increase their copper exposure. Everyone believes copper is going up, supply and demand wise. And we've got a weak Australian dollar. So that sees copper in Australian dollar terms going through the roof.
So how do you play it then? Now, look, we've said this many times, there's only really a handful of pure copper plays locally.
I know, and I blame BHP for that. Odds Minerals used to be a great company, and it looked after us very, very nicely, but of course BHP took it out. Great buy for them in hindsight. Samphire Resources is now where we have our money. It's had a great run. It's knocking on the door of all. It made all new all-time highs yesterday, in line with the copper price in Australian dollar terms. It's down slightly today after last night's reversion. And this is the quandary. It's like, okay, copper right here, right now, is being pushed up falsely in our opinion. Do you take money off the table? But the underlying thematic of global electrification is still there, and it's still strong, and it's going to still keep on going. So in our opinion, if you take money off the table, you've got to be quite nimble and be prepared to buy another 10 or 15% dip in copper, or in Samphire, which tends to happen quite regularly. I don't know if you've got the chart up, but it's not like it's an uncommon thing. So our view is you have to be long copper medium term. Short term, it's looking a bit tired.
Well, why not just buy an ETF? Is that a good way to play it?
It's a fascinating way to play it, because it has been a bad way to play it. Because you haven't been exposed to the, largely, depending which ETF you've chosen, but if you look at the wire ETF on the ASX, you've got a lot of stocks in there which haven't got the benefit of the Australian dollar, or the weakness in the Australian dollar, such as Samphire. So it's actually had a pretty rough time. If you can get the chart up, I did put it in there today. It's trading well below levels of a year or two ago. There we go. So look, it's still not well below mid-2024, I should say. Now, to me, it looks very constructive. I still think it probably goes higher. But it would frustrate you. If you look to the price of Samphire, if you look to the price of copper, especially in Australian dollar terms, and then you look at the price of the wire ETF, you'd be saying, what have I done wrong? I've called the market right, I've called the thematic right, and I've potentially lost money, depending on your timing. And even with Anglo American, which BHP tried to buy last year, that stock is trading today below where it was when BHP made the bid, or when BHP's bid was not back, because the global copper stocks haven't run as hard because they haven't got the benefits of the Australian dollar terms, and they haven't all executed as well as some of our stocks here. Another option as well, sorry to interrupt you, another option of course is if you like gold, Evolution Mining is now 25% of gold, copper stock as well. There are a couple of options on the ASX, but they're a bit thin.
Well, as I was going to say, because gold and copper are close cousins, of course, so is that a good way to play? Yep, it's one of those larger miners that has foot in both camps.
I think so. I mean, we're along the two, and the number of times I've sat down with James at Market Matters and said, should we take a bid off the table? Should we take a bid off the table? But every time we've held back, it's been in our interest. They've just kept on running. And it's hard to know. But we're not traders anyway. We're what we call active investors. The answer to your question anyway is yes. They look good. Both Samphire and especially Evolution have been executing extremely well. So as companies, we like them. The underlying core thematics we like. Medium term, short term, they just feel a bit overcooked. So it depends. I wouldn't be leveraged along them here, that's for sure. And if I was overweight them or significantly overweight them, I might take a bit off the table. But looking at a few more years, I think they look great. You've got to decide on your risk profile how you play that accordingly.
Sure. Shawn, have you been topping up on your gold exposure, or are you just happy to ride it at the moment?
No, we've been riding it, but by definition, because we haven't been taking any off the table, we have been increasing it. It has been increasing as a portfolio weighting. It's always taking profits is very easy. Holding on to them can be quite hard. Gold is now trading around our target of the last few years, but there's no real reason why one would get out. All the tailwinds are still there.